Okay, recording this video on Sunday, the 12th of March, 2023. Just gone 3:24 p.m. Chicago time. Do hope you are doing well. So, quite a weekend we are having. Going to do two things in this video. As it's the weekend, we're going to do a weekend futures market recap. We'll go through 15 of the largest futures markets on a tick bar chart kind of basics, so a short-term basis. And I show you some of the signals that generated last week and some of the things that are setting up for next week. But first of all, we're going to talk about rates and the Fed, Silicon Valley Bank, because that is obviously on everybody's mind. So the first chart I'm going to show you is a chart last showed you back in December, the 19th of December, when I was responding to Felix Zulov's view that bonds were going to rally. And so we're going to go back to two kind of long-term charts to do with bonds, rates and the bond prices themselves. In this first little setup here, we have three charts side by side on TradeStation looking at interest rates. So this is dollar FVX.X, which is the 5-year interest rate, dollar TNX.X, which is the 10-year interest rate, and dollar TYX.X, which is the 30-year. So 5, 10, and 30-year kind of bond interest rates. And the way they're plotted is multiplied by 10. So we got the 30-year sitting at about 4%. We've got the 10-year sitting at about 4.1%. And we've got the 5-year sitting just under 4%, kind of maxed out here at about 4.3%. And what we've got on each of these charts is beta sine wave. And beta sine wave, you've got two different plots here. Below the price bars, we have the plate of spaghetti, which is beta sine wave, which is calculating the cyclical turns in 3 different time frames. And then we put those confirmed turns on the price bars themselves, showing support and resistance. Support in red, resistance in white. So let's go to some of these charts and I can show you what I'm seeing on them. As soon as we break above a resistance line, we break into an uptrend here. So on the highest time frame here, you can see this very solid white line, which is breaking into a long-term uptrend. And then you see the end of trend signals ripple through the time frames. You can see here that we get our first little shoulder, left shoulder on this move with a pullback to end of trend on the lowest time frame. And then we go ahead and we make pullback to end of trend on the intermediate time frame because the lines are a little bit thicker here. So a left shoulder ahead, and we're going to make a right shoulder over here. Now, this is second cyclical turn after an end of trend. And we can see on this chart, the trend move was so strong, we kept on busting up through resistances here. You can see the bars are all red, showing we're in an uptrend. And so we needed to make another little pullback to end of trend on the lowest time frame after that strength there. But this turn that we've had in the last 2 or 3 days is a second cyclical turn after end of trend. So on the intermediate time frame, we have an end of trend, and then we go in and we put in support. So that's 1 cyclical turn after end of trend, and 2 cyclical turns after end of trend is this point up here. So in the last 3 days on the daily chart, extremely important turning point. The trending energy has exhausted itself with end of trend, and then we go through a little bit of a cyclical phase, which is this move here, which ends up with a second cyclical turn, which gives us a local turning point where we have potentially the start of a new trending move. Now, not saying that rates are going to go down forever now, but they will go down until we have cyclical support coming in on the highest time frame. So when these two lines cross together, we will keep on going down until we get that support. And it also means that we will probably sync up with an end of trend move on the lowest time frame. So it'll be bumpy on the way down, but that's what we're looking at here. We've maxed out with rates topping out in October, November, and now we're going through a phase where rates are going down. And you can see this pattern on all time frames here with the end of trends rippling through. Here's that left shoulder with a pullback to end of trend. Here's the head of the move with pullback to end of trend on the intermediate time frame. Second cyclical turn after end of trend, and this is looking at the 10-year. We were just looking at the 30-year. And exactly the same thing on the 5-year. Here we had a nice confluence of end of trends. There's our left shoulder being made by 2 end of trends on that lowest time frame. Then pullback end of trend on the intermediate. Maxed out second cyclical turn after end of trend. Anyway, so bit of a broken record there, but what we're seeing is rates have maxed out. Having looked at rates, let's look at the bonds themselves. So if rates have maxed out and gone all the way up and they're likely to come down, we see the inverse with bonds. So bonds are coming all the way down and starting to turn and rally. And so here what we've got is we've got 3 different charts looking at the 30-year, the 10-year, and the 5-year looking at the bond futures themselves. So at US, at TY, and at FV. I happen to have this little ending piece here which just changes the rollover date in TradeStation. That's kind of a minor thing, but what we need to look at is all the triple signals that are going on here. So the first one I'm going to show you is on the 30-year bonds. So we maxed out with exhaustion buy, bearish divergence, blue professional bars into those highs. We signaled into a downtrend. We had a little bit of strength, and then the blue professional bars kind of came in. We sell it down. There's a stair-step trade on that rally. The blue professional bars kind of come in. Let me just bump that up to show you exactly. There we go. Blue professional bars come in. They didn't come in on the lows here. They were selling the rally, bang, stair-step trade down, and we've gone all the way down. Now, the last time we did a video on bonds with TLT signals and so on was back with the Felix Zuloff interview back on the 19th of December. We were talking back then saying, yep, there was likely to be a rally in bonds, but it was too early back in December to call that because we had not seen blue professional bars or exhaustion sell. So last time we had seen blue professional bars were just on this rally, kind of selling that rally. We've got a bearish divergence, but look what's happened over the last 2 weeks here. Into those lows, blue professional bars, exhaustion sell, bullish divergence. We're busted above our trailing stop with better pro-am, bang, we got our signal long on Thursday. So that's US bonds signaled into an uptrend. And then let us go look at the 10-year. Exactly the same thing. The signal came a little bit earlier, but look at all these blue professional bars. Again, review the video we did on the 19th of December, which was saying it was too early because we had not seen blue professional bars at the lows. Well, we got them last week. Blue professional bars come in, well, our exhaustion sell signal down here. We've got signs of strength. That's the arrows, red arrows pointing upwards. And then this is with Thursday, Friday's activity, bang, that rally has begun. And then we can go to the 5 years. As well, exactly the same thing. Again, signal was a little bit earlier, but once we came back down, blue professional bars, exhaustion sell, we've taken off to the upside. So for me at the moment, that is the most important kind of series of charts, kind of on a swing term basis, that we have seen the high in rates come in, and the bond markets all across all time frames are starting to rally because of that. So that's extremely important. Now, where equities go, who knows? The turn has happened in bonds. You know, equities, I think we're a little bit too early. But the two charts that I'm looking at on the kind of shorter term basis are the 15-minute chart and the 13,500 tip bar chart. For me, this is quite important on the 15-minute chart that we've had a whole bunch of Rambo signals come in with Friday's trade. And we tend to kind of bounce against Rambo patterns. We could kind of sell off a little bit more on Sunday into Monday and kind of go a little bit lower, but the break above that whole amateur sequence with amateur bars here above 39 kind of 50 level here would be a signal that that temporary kind of low is in, and the amateurs have got wrong-footed there. So I'm saying this because we are kind of oversold on this basis. We're below supports on the lowest time frame. We've likely got to put in a pullback to end of trend. There's no blue professional bars really kind of coming at the lows. Our trailing stop on Breda Pro-Am is kind of well above us there. So yeah, we're still going to go put in some pullback to end of trends. It's going to be bumpy ride, I think, Sunday, Monday, Tuesday, before that kind of low is kind of put in. But that's, for me, is quite important, whether those Rambo patterns are going to hold and we kind of get above that sequence. 13,500 tip bar chart, yep, we're still in a downtrend. No blue professional bars yet. The last exhaustion sell signal we had here, so maybe we're going to see another one with Sunday, Monday's trade there. But, you know, this could all be driven by any announcements that are made by the Federal Treasury on Monday. That if the markets are calmed, you know, we could see quite a rally happening in equities just because we're oversold. You know, we're below supports on these time frames. Yep, no blue professional bars yet on the 13,500, but you know, well, let's wait and see. But this is, for me, this is the important move on a swing trading basis, is the rally in bonds. So that's the one that's kind of getting going at the moment. So there we go. That's kind of the reaction to SVB with rates and bonds, and let's see if we get more kind of announcements from the Fed or the Treasury on Monday morning. Now let's take a look at kind of signals this week on the tip bar charts. We'll rip around the forex markets kind of first. Here's the euro. The vertical solid yellow lines are the beginning and the ends of the weeks. So this week's activity here started here. We had a rally in euro, kind of sold off, and we've kind of held down here, and super volatile Thursday, Friday's kind of trade here. but we're in an uptrend on the euro. We got to 107 again. It's like a third time we've hit 107, kind of sold off pretty hard to 6.5. But the last time we saw blue professional bars here was on the dip. And so I was long euro, shorted the euro based on the 500 tip bar chart, and I'm long euro again. So I'm looking for this to go through 107 on the upside, but it is a little bit kind of scary, the amount of volatility that's going through at the moment. British pound, what have we got here? Similar type rally. And let's see, why is this selling off? Because people are seeing the interest rate differential between the US and the rest of the world. And so if the US dollar has been rallying because rates have been raised in the US, now that rates are likely to be cut in the US, the market is anticipating that there's more probability of rates going down in the US, and therefore the interest rate differential becomes less attractive. Therefore, the US dollar sells off, and these other forex currencies kind of rally on that basis. But if there is a full-blown panic, people do tend to panic into the US dollar. So let's wait and see. So this British pound. So this week's trade, we kind of sold off again. This little rally didn't work out. Exhaustion buy. We fell out of bed again, but with this week's activity, we had another signal down here. More blue professional bars kind of come in and start this rally. On little dips here, you can see the blue professional bars as we step up. And so we're in an uptrend on the British pound at the moment. Aussie dollar, I don't think the Aussie's been so hot this week. It kind of sold off. Exhaustion buy, bearish divergence. We didn't get a signal at that point because we weren't overbought there. We didn't have a background in grey. But anyway, we've kind of sold off at this point here. Wouldn't say this particularly attractive looking chart for the Aussie because we've got no exhaustion sell on the downside. So let's wait and see on that. And Japanese yen. Japanese yen, this week's activity, we rallied from exhaustion sell, bullish divergence, blue professional bars. Super volatile again, but we're above these blue professional bars, and that's why we're showing strength in the Japanese yen. So that's the forex. On the E-mini, 13,500 tip bar chart, we're trying to hold, but no, just will not, refuses to hold. So we've got no blue professional bars down here, no exhaustion sells. We've got no signals to go long on the E-mini at the moment. So that's we'll have to wait and see Monday, Tuesday if we do get something there. Bonds, as I said with yesterday's video, this is where the rally started Thursday, Friday. On the long-term charts, we got the bonds kind of rallying. On the short-term charts, you can see here the way it's set up with this week's trade. Blue professional bars, exhaustion sell, bullish divergence, and a flush pattern. We're oversold, another little background in red there. We get a triple signal, bang, super strong. No exhaustion buy, no blue professional bars at the highs there, so we're still in an uptrend on the 10-year there. Now, let's look at gold, because gold also started to rally this week. Again, signals kind of midweek, Wednesday, Thursday here. Based on that exhaustion buy bearish bullish divergence here, so kind of in the wrong place, but anyway, we've got the signals, and it did rally pretty hard into 1875. Again, I think that's a little bit kind of as a result of the panic into safer assets maybe. Silver, we've not got a signal here because we didn't get exhaustion sell at that point. That was a nice signal, kind of short into this move here, and we've kind of held at this moment. So silver's kind of, I don't know, silver and gold over the last 3 or 4 months, we're rarely getting those nice little exhaustion sell patterns on the downside. Bitcoin starting to rally this weekend. You can see here nice signals at the end of last week into Friday. All these exhaustion sell patterns, blue professional bars, bullish divergence. We break above pro-am. We're oversold because the background in red, bang, we get a nice rally going on at the moment. So we went down to the 19,000s and we're above 21,000. So Bitcoin is starting to rally. Crude. Now, crude I think is very important at the moment. Nice signal on Friday. We had short signals at the beginning of the week with all these blue professional bars kind of come in here, bang. We sell it down from 80, 81. We're down at 76, and all the blue professional bars come back in again. We've had another signal kind of long. This is really interesting to me at the moment. So let's see if crude is one of those kind of tearaway moves today. I know that Martin Armstrong has an alert out for Monday with a panic move, and I don't think when he defines panic moves that can be up or down. So let's look at that this week. That'll be really interesting to see if that kind of takes off to the upside based on his timing. Natural gas, we're down at 240. Again, we kind of maxed out here exactly at $3. Blue professional bars kind of come in, signals sell it down, a little bit of a rally. Didn't look good because look at those blue professional bars, they're not at the lows, and we've had no blue professional bars come in at the lows yet on natural gas. On the daily charts though, natural gas is starting to find a bottom. Copper, nice rally, kind of selling off here. We've not had exhaustion sell on the downside, no blue professional bars coming in at these lows. So it's kind of looking a little bit weak on copper. And then the ags, corn, trying to bottom down here. All the blue professional bars, bullish divergence, oversold down here, but this has not held yet on corn. It's early on that, but I think soybeans, no. Look at this, professional bars into those highs, exhaustion buy, bearish divergence, we signal down, bang. But on the flip side, now the blue professional bars are kind of at 1500, a whole bunch of them, bullish divergence is in. We just need to break up to 1512. Now kind of signal long on soybeans, so that's interesting. And lastly, wheat. Yep, we got a signal down here. So wheat has started to rally. Blue professional bar kind of busting out of this area where the professionals were kind of active up those highs there. So there is wheat looking interesting. But obviously, these aren't going to be the important markets this week. I think crude potentially is going to be very important. Equities, let's see if we get a turn in equities kind of at the beginning of the week. And obviously bonds. So I think it's kind of a little bit of a wait and see what happens, and have all my feeds open in order to catch announcements as they're made, because they'll be reflected on the price charts very quickly, I would imagine. Anyway, so there we go. Hope that was useful to you, and looking forward to next week's trade.